Welcome to a vlog about life. Life is an acronym for learning investing for empowerment. Here you will learn tips and tricks on investing, stock strategy, business steps, and much more. We hope you like, share, and subscribe. Disclaimer in the show notes. Thank you for clicking in. Let's get started. Buying stocks. Okay. So, when you talk about buying stocks, you kind of just want to get into different steps, strategies. Today, we're going to get into different attributes. So, what kind of investor in the markets are you? So, are you a conservative, a moderate, or an aggressive? So, let's break these down. A conservative, you like a large margin of safety. So you like low volume of stocks, more on a higher rate of bonds, because it's a larger margin of safety than it is investing in individual stocks in the market, because the volatility is a little bit higher. So when you're thinking about your type of person you are, that's a conservative. They're a lot safer. They want to be able to still be able to go on trips. They don't want to have to pay attention to the market on a day-to-day or every 6 months, or maybe they want to check it out once a year or every couple of years. So they look at a conservative style portfolio. Minimum amount of stocks, a lot more bonds, not too many risky assets. So now you want to get into somebody that doesn't want to get into too much risk, but still wants some risk. So we go to the moderate. You're a moderate type of strategist when it comes to your investing style. That means you got a higher amount of stocks, not too high, but it's much higher than a conservative. Like you feel like, you know what, I know a little bit about individual stocks. I can buy a little bit more than someone who's maybe in their 60s. So you look at a moderate as one of those, a little bit like the medium version of stocks, a little bit less bonds. So they're really feel like they're more confident about the market than the conservative. Or maybe they just know something the conservative doesn't. But my favorite is the last one, the aggressor. So aggressive portfolios are more high amount of stocks and low on bonds. So someone in their 20s would be more of an aggressive investor due to their time horizon with age. Retirement 65, they're 20, they got about 45 years of mistakes they can make, hopefully not many, but they're still capable of making mistakes and recovering. So a lot more younger people become a little more aggressive about their investment style due to their age. So if you're 20, it's okay to make a few mistakes, just hope you learn from them. So that's what I wanted to get into when it comes to what kind of investor you are in the market. You could be one of these three. So let's get into one more thing on how I would pick my stocks. So how are you grading your stocks? Like, do you look at the name, the price? Do you figure out who's running the company? So let's get into more specifics on that. So how are you grading your stocks? Are you looking at the cost structure? Meaning, are you checking out their pricing? Do customers appreciate their pricing? Or are they like, they are inflating this. It is not that good. It shouldn't be this expensive. So you want to also look into your cost structure of a stock company to see what their pricing's like, their stock price. All these things matter. So their brand recognition. When you see that Apple, you know that product is reliable. You know they put time into it. They've worked out the bugs. They have updates. When you see that Apple, that's brand recognition. The same thing with Nike, Jordan, brand recognition. That's why I love the Nike stock, because you can go anywhere in the globe. I guarantee people know what a pair of Nikes are. That's extreme brand recognition. The next one is corporate reputation. So, is this company honest? Do they have good integrity? Are they transparent? Are they not holding out on advice or information about what the company's going to do in the future? So you want to look in corporate reputation. That matters when picking stocks too. So you can't just look at the price of the stock and some news that just popped up a week ago, because there's a lot more to it. So corporate reputation is finding out if the SEC hates your company, basically, or is it really holding up its end of the bargain that it says on the earnings calls, and it tells you what they're going to do about growth. That is corporate reputation. Distribution network. How is this company's supply chain? Amazon has a very immaculate supply chain or distribution network. You can literally get same-day pickups. Same-day delivery. That lets you know their supply chain is strong. That whereas the wait time has decreased. I remember when you used to have to order stuff 5 to 7 business days and then went down to 2 to 3 business days. Now it's almost hours sometimes, depending on the product, because they have hubs everywhere. That's a great distribution network and supply chain. Great stock, by the way. Superior customer support. That means even though another product can have a cheaper price, they still will pick the Apple product because the customer support, they know that they will be taken care of if something breaks. They know they have insurance. They know there's things that will happen if something goes wrong with their item, and they know that for a fact. That is superior customer support, to where your customers believe in the product and what can happen if something goes wrong. So I would love to get into that, definitely, and I hope everybody knows. So today, we're getting on stock part of the news. So today is Thursday, March 28th, 2024. And for our stock news segment, we are getting into the FTX CEO sentenced to 25 years after the crypto company was caught in a fraud case, ordered to pay $11 billion in fines for defrauding FTX investors. So he's gonna have to sell assets. He's gonna have to do a lot of things. I'm pretty sure he's gonna try to appeal. But this goes to show that you have to do diligence on these companies, because some companies have bad apples that feel like they are above the law, above the CEC, the SEC. So you want to be able to know who's running these companies and check their backstories, because you never know. Like, it's your money, so it should be important to you to do this due diligence so you don't get this situation. Because now there's a company literally buying the debt of all the people that lost money, so they can literally at like pennies on the dollar, so they can literally get rid of. So when they get paid from the case, all that money will go to whoever just sold that. So basically, you got to be careful who you invest with, and please check, do your homework. We just talked about that, how you grade a stock. So if you rewind it, this would help you with this problem. The next thing I want to get into the news, it's March Madness season. And in March Madness, you got the Sweet 16, the Final Four, things like that. But no one thinks, and I like this because it gives you an edge when it comes to investing, because specific seasons help specific stocks. So in the summer, Callaway stock helps because everyone loves golf in the summer. So they get a nice up spike in the summer. So when it comes to the March Madness and how it affects your stocks, let's think. If you have some media stocks, if you had some advertising stocks, if you had some restaurants, some hotels or airlines, they all play a part in this year's March Madness, and they all are publicly traded. So when a season comes into play, you also want to think of what stocks are affected by this season. Christmas, retail, Halloween, different things. So you always want to take into consideration the different things that can give you an edge. And that's why I love the market, because there's different techniques and tips. As long as you do your research and read, you can find these things out. I didn't go to college for this, but I love it so much. I'm passionate about it. So I'm happy to read. I'm happy to spend time in the library to get this information, listen to different people better than me at it. One of my mentors, Warren Buffett, I've read every book on him. Ben Graham, his mentor, I read books on him. So I get to understand why Warren Buffett is the way he is, or why investors are the way they are, because I've read different books on these people and just learned trial and error, just learned different things. So I believe this can help. And that's why I started the vlog, Learning Investing for Empowerment, or a vlog about life. So with no further ado, enjoy the rest of your day. Have a great weekend. Oh wait, only today's Thursday. Oh my goodness, I'm losing track of the days. But enjoy the rest of your day. I look forward to speaking with you all tomorrow. Have a great night. Bye-bye.